Hi, I'm David Schenk. I'm an attorney and enrolled agent, enrolled to practice before the IRS, and I talk about tax issues, estate planning, and asset protection. Today we're going to talk about currently not collectible status. Although it might seem like the IRS is a cold, heartless institution who doesn't care if you starve as long as you pay your taxes, and they pretty much are, they actually do have standards that prevent them from trying to collect from you if collecting would make you unable to pay your necessary living expenses. So if you can demonstrate to the IRS that you cannot both pay your tax debt and your necessary living expenses for you and your household, your dependents, they can put you on currently not collectible status. And this is going to stop all levies and garnishments and other collection actions. They're just going to stop trying to collect from you because you're currently not collectible. Of course, the IRS may have different ideas about what your necessary living expenses are than you do, and they almost definitely do. The IRS is going to compare your actual expenses with their collection standards, and they may decide that you're spending too much on various items. So, for example, if your rent is $2,000, they may only allow $1,300, and then they will consider that extra $700 available to pay taxes. And they're basically saying that you should move to someplace cheaper and give them that money. But if you are genuinely unable to provide for your family with the levies, currently not collectible status is a real possibility. To get currently not collectible status, you're going to have to provide the IRS with complete financial information, including your income and your assets and your household expenses. And if your financial disclosure demonstrates that after paying your necessary living expenses, you have little or no money available to pay your tax debt, you can be put on currently not collectible status. It's a very thorough documentation of your finances. This is not something they just hand out like candy. But if you seriously cannot afford to pay your taxes and your living expenses, it can be worth the effort. However, to acquire currently not collectible status, the IRS states that the taxpayer must demonstrate a severe economic disadvantage and not just a mild inconvenience. So they're often looking for things like a job loss, illness with high medical bills, disability, natural disasters, things of that nature. It's not the only way to get it, but these are things that they kind of look for. Also bear in mind that currently not collectible status doesn't last forever. The IRS is going to monitor your financial condition, mostly by examining your tax returns and other informational returns that they have for you. And if they find that your condition has changed, they will review your status and possibly start collection activity again. Keep in mind that while you're on currently not collectible status, your tax debt still exists, and it's going to continue to grow as penalties and/or interest are accrued. But one nice thing about currently not collectible status is that the statute of limitations is going to continue to run, so that some people stay on currently not collectible status until the statute of limitations runs out and they never have to pay their tax debt. Disclaimer: this video and any accompanying text is for informational purposes only. The information provided does not and is not intended to constitute legal advice. No attorney-client or similar relationship is formed. If you require legal advice, please contact an attorney or other legal professional. This video covers a complex legal area in just a few minutes, and of necessity leaves out much of the detail. Don't make decisions based only on this video.